Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is a series where we analyze and decode Nifty on multiple time frames so that we can trade the following day with much more confidence and clarity. Uh, I am at the airport now, waiting for my flight. So the video might have some audio or sound disruptions. So sorry in advance for that. Uh, but today's video is again gonna be important because I'm gonna explain the special trick or hack that I had explained at the end of last day's video about a setup that I use, especially only on expiry days. And while I was on my flight to Delhi, uh, I was obviously not watching the markets, and that same exact thing did happen in the market today. So anyone of you who would have watched the video, and if you would have observed that particular thing, please put it down in the comments. If not, please take a note of it. I'll be explaining it along with the open interest charts, so that you can take a note of it the next expiry, right? In case if you guys like the way I analyze Nifty and put out price action concepts, please like the video, subscribe to the channel, and also put down anything that you might have to say in the comments box, be it feedback, be it criticism. I am open to everything, right? So on that note, let's start with what we had planned today versus what actually happened in the market and how did we play that. For you guys, all know that I did not trade. Uh, my vacation has started. I have already taken a flight from my hometown to New Delhi, from where I have my connecting flight to Japan at 8 p.m. tonight. So I have logged out of all my trading accounts. I have transferred all the trading funds to my savings bank account, so that even if I want to, even if there isn't any control, although it does not happen with me when I'm traveling, I do not trade. Uh, Even if in the while testing the urge comes up for to trade something, I do not trade, right? So that is something which is a personal rules for me, which is no trading when on vacation or when on holidays. It is best to enjoy the place where you are instead of trying to have the tension and stress of the market, right? So uh, yeah, let's just start with today's video. Yesterday, what we had planned was we were looking at a short only below this particular low, which was also a 2 day low with a pullback, long above this particular swing high with a pullback, and maybe a long in case of a big gap up around this time, right? I was expecting a bigger gap up in the morning today, based on the news of U.S. courts putting a hold on the trade tariff war that Mr. Donald Trump has been imposing everywhere. Uh, and I thought that market would take it positively, and this was a surprise event. And market opened, but with a very slight gap up. There was obviously no trade on the long side here. This candle started, the market started to fall down. Now, again, around on the bottom side, on the short side, this was the candle which was the alert candle. This was the pullback which had come in, but there was no entry which was triggered. The only trade which could have been traded today, and in fact, if I would have been trading today, that would have been the only trade that I would have taken, and I will just show it to you guys in a couple of minutes. So, anybody who has not seen yesterday's video, please go back and watch the end of yesterday's video where I had explained a bonus script or a bonus setup that I use only on expiry days. Now, I had also suggested do not trade it from tomorrow. Observe it for a couple of expiries. Does not happen on all the expiries. Might happen in one or two expiries in a month. But you should be aware of it and you should be look out for it because that is something wherein the risk is very little and you can get exponential rewards, right? So what I had told was post 2 p.m. Okay. So this is around 2 p.m. where the market was around 24,750 levels. Look at the open interest. Uh, so this is the Sensible platform. Again, I have logged in using my Zerodha account, right? So uh, if you can see, call OI at 1:59 p.m. was 2.71 CR. Again, this is the same because I've used the same time, not a change in OI. So what we can see is around 2 p.m. the highest call writing was at 24,800, while the market was trading at around 24,750 levels. And these two had the highest amount of call writing. And in case if market wants to trap these people, it will go up, uh, making them square off their positions and also triggering their stop losses. Have a look. if we have a look around 2 p.m., this is where I said this is where you start observing that which strike price or in which direction the market, if it moves, has the higher probability of people getting stuck. And in today's case, it was the call writers who had shorted the markets, and uh, if market starts moving up, they would be forced to exit their positions, adding fuel to the fire and leading to a good momentum-based rally in the market on the upside. And that is exactly what happened. And in case, and not in case, and what I also want you guys to do and talk to the market is what I always say. Market broke down below 2 days low, right? Try to understand the sentiment of people around here. There would have been so many people who would have sorted the markets in this particular candle because they were expecting the market to continue the downward rally or downward journey from here. But market reversed, went sideways for some time, broke out again from here. And if you simply move the move came around 250, I suppose. And if you move the candles around that point of time, yeah, so you would be seeing that these people are exiting. So once you play this in the live market, just select OI change around here, show OI change, and then select this particular thing, which is the last 5 minutes option, and you would see this thing, right? This is where you will see that 45.14 lakh people had exited those calls, right? Of 24,000, sorry, 24,800 was around here. So 24.52 lakh. So at that point of time, what we saw around 2 p.m., what was the OI? I'm sorry, guys. In case if I would have been trading this in the live market, I would have known the figures. So around, see, you can see the amount of contracts here at 2 p.m. Was 2.71 CR. Fast forward to 3 p.m. 24,800 is the strike that I was looking. 24,800. Call OI at 3 p.m. was 3.13 CR. Okay, it had increased. But I believe post that there was a call OI at 2:56 p.m. was 250. Right. So if we look at this particular chart around here, so call OI at 304 was 3.08 CR, whereas 1.5 CR people had moved out. So basically, this is something which when you observe in the live market is something which will give you much more clarity, and take a note of it. And this is something which happens on particular expiries. And what you can do is you can buy at the money options based on your direction. You can buy at the money options of the current week's expiry, which you will get at very cheap because it's post 2 p.m. and the expiry is at 3:30 p.m. And you'll get those options at very cheap prices, and your risk would be very low. But then, in case a move like this comes, your reward would be in at least 1:7, 1:8 is what you should aim for in this particular trade, right? So this is something which is a food for thought for all of you guys, which you can look at on expiry days. On expiry days, if I would have taken a trade around any of these levels, I would have traded in the next week's expiry, but only for this particular move, which is based on the change in open interest or which side has much higher open interest and which side has a higher probability of people getting trapped, is what I look at trading in the current week's expiry options, right? So I hope you guys would have learned something new, or even if you were aware of this, please let me know in the comment box and give me a feedback about how do you find this is a very simple setup. Very simple setup. All you need to do is keep an eye and on the open interest, as well as in case the market is gone up sideways for a long time, it's a very good sign. Plus a bonus thing around here is market actually after being sideways broke down below 2 day low, not just 1 day but 2 day low, and immediately reversed. So that means market has no particular mood to go down, and these people might be getting trapped around here who would have shorted 24,800 or 1050 call options. So This was the simple trade idea that I had tried to explain in the video yesterday. I'm glad it happened in the markets today, and that is the reason I can explain it to you guys with much more clarity. Now, for tomorrow, what I will suggest is let's just look at the pricing on a daily time frame. On a daily time frame, what we again is a kind of a doji, but opening is the closing is very near to the opening, but it is skewed towards on the upper side market, obviously because of the momentum based rally which came around post 2:50 p.m. In the market today, market has kind of closed near the day's high, not exactly, yeah, market has closed near the day's high. The adjusted closing is much below, but around here, market has closed around day's high. For tomorrow, again, my bias would be on the upside. Now try to understand a couple of things here. First things first, mark today's high. Okay. Try to pay close attention to what I'm about to say. Market has closed near day's high today. Now this is another setup which might work tomorrow. Once if in case if we see a flat opening, slight gap up opening, market goes up, okay, creates a green or a bullish candle, not green candle saying would be a wrong. Try to understand the sentiment of the candle. Is the candle bullish? And when market breaks down below that, we will get a move on the downside. Now, I'm not exactly telling you to short around here. Please do not just look at this arrow because this does not mean we short here. What we need here is a candle which is bullish in sentiment and a break below this. This simply means market would invite fresh new buyers around here, and once their SL is gone, it would they would be trapped, and this is a trap setup basically. And then we can see a good move on the downside, which you can capitalize on. Apart from that, obviously above this high, our plan still remains the same. We are planning to look for a long. Say, for example, this is the green candle which comes. The low does not break. It gives us a pullback and it continues. So this is the trade that we take in case of a flattish to a minor gap up opening. In case of a bigger gap up opening, just excuse me. I'll just extend this particular zone. The low was slightly breached, so I'm not playing around with these levels. Do not need to be adjusted much. So say for example, market opens with a very big gap up. What we can do is we can wait for markets to come down to these levels and then look at a buying opportunity. If market opens with a gap down, uh, my intuition is that market will be a little volatile and any short trade we should look at only below today's low. All right. So this will be the plan. Please do not trade in this particular zone. This will be a zone of high volatility with very high chances of your stop losses being triggered for no reason. Right. So this is it from my side for today. I hope you guys have a good trading day tomorrow. I will try to come down for the video tomorrow evening or maybe the weekend is still there. So based on my free time from my traveling, I will be putting up the video for Monday. I will definitely be putting it up for Monday because the weekend is there and I will definitely be getting some time in between. So I'll see you guys again soon with the next set of video. In the meantime, please do not forget to like, subscribe, and please let me know in the comments what do you think of this particular expiry setup that I had just explained yesterday and which you guys would have seen in the live market today, right? So this is your Nifty guy signing off. I hope you guys have a good day. I'll see you guys again tomorrow. Cheers. Thank you so much.